Hello, good evening guys. My name is CryptoKeep and today I want us to discuss a very important topic which will be needed going forward. It is a very short topic and it is highly essential for us to know this. This is why I'm doing this now before we commence into the supply and demand series. So what I want to talk about today is simply a break. Like let's say the importance of having a candle close in breaks. And when I say breaks, I mean break of structure, break of zone, break of levels, or anything at all that needs to be broken in the market. Probably, or let's term it confirmation with candle close. So this topic will touch on every other topic I have done in the past, which is market structure, support and resistance, trend lines, and also supply and demand, even though I'm here to talk about supply and demand, and also price action as well. So you want to pay attention to this because when we start the supply and demand course, I won't be explaining much of these things anymore. So we have done so far the volume and price analysis, trend line, support and resistance, candlesticks, market structure, and some other ones I may not remember as of this moment. So today we are doing breaks. Call it anything, but I call it the importance of having candle close as confirmation to confirm either your zone has been fully broken or either the market structure has been correctly broken, or if your support and resistance has been correctly broken. So going forward, I believe you already know how to read candlesticks and you know the rudiments of what is into it when you see a chart. You know, a chart may not necessarily be of red and green candles, but any other color which you can customize to what you desire. But the fact means for a candle to open at a low point and closes above that opening point means it is a bullish candle, and if it opens at a point and closes below that particular point, it is a bearish candle. Nonetheless, what the color is. So going forward, I may not be using this color chart anymore. I'll be using my own customized chart, which is more suitable and comfortable to my eyes. So let's get into it. So when we talk about break of structure, I will start with break of structure. There are many things we should pay attention to. We have break of trend lines, break of support, break of demand or supply, and break of many things in the market. So what you want to pay attention to is when exactly has a correct break happened. This course will help us to know when a level has been completely broken. Now, for example, assuming we have this structure. This is a bullish structure, right? Assuming we have this structure here. This is a bullish structure, and we can connect the lows to have a trend line. We can also extend it. Let me make it a perfect trend. So here we have a low to an high, and higher lows, higher highs, higher low again, and higher high. So definitely the expectation of this market is to retrace back and continue to the upside when looking at solely market structure. When looking at Elliott waves, it's entirely different thing, because on this particular move we already have a completed 5 impulsive waves, which is 0 to 1, 2, 3, 4, and 5. So when this is complete, it becomes a subwave in a much bigger waves, and then this becomes 0 to 1, and then we have 1 to 2 anywhere it finds support using a corrective wave of ABC. But now we are on to market structure. So the expectation of this market is to pull back from this point, probably into the trend line, and then continue higher. And we know sometimes it may not pull back into the trend line, but a bit probably this resistance will turn to support, find support there, and then continue higher. Other times, we might have price coming to break this trend line while this low is still intact, and then continue upward. So those are the different types of scenario that we can actually get, the three different types of scenario that we can actually get when we are in a bullish market. Now, how do we really identify when this trend line breaks? Some people who trade trend lines as diagonal support and resistance, they believe the moment this trend line breaks, that is going to be retested and price will continue being bearish. The moment they see the trend line is broken, either by a wick or by a close of candle, they believe the market structure has changed to being bearish, which is not entirely correct, because for the structure to be broken and to become bearish, we must see the low leading to your higher high being broken. So market structure wise, this is the low we want to see to be broken before we turn our bias to being bearish. Whereas people trading trend lines wants this trend line to be broken for them to turn their bias to bearishness or bearish bias. Also, at this point, we have support and resistance trader, people who are turning this resistance into support. And here, at this particular structure low, or swing low as some people call it, you have support there as well. And fortunately, the support is just right around this former resistance turning support here. So this is a level of resistance which we hope will become support. So support and resistance trader expect something like this, continuation to the upside. If not, then they will be expecting these very lows to hold as support again. So how do we know when these things are broken? That is the purpose of this lesson today. Most times in the market, okay, let me do this. This is a structural low where if price breaks below it, then the structure has broken. Whereas this is a trend line that if price breaks below it, we believe the trend line has also broken. But as we know, price can take a new trend pattern, as in a new trend way or trend path. Like if it breaks like this and comes, then you have to connect like this, no longer using this trend path, but this new trend path. So bear that in mind as well. So when do we know that this trend line or this support here or this structural low or swing low here is completely broken? Because most times in the market, what we see is we see something like this. We see something like this. Let me use this tool here. We see something like this in the market most times. This is what we see. We see a candle coming like this, a bearish candle, and then we see a wick below it like this. It's a bearish candle. Many people will take it because for price to cross below this trend line, they take it that the trend line has broken and now they are bearish. Also, on the break of structure or structural break, this is the level to break for you to turn your bias to bearish bias. Now you have prices coming down, then you have a candle or another red candle like this. Let me draw this way. You have another red candle doing this, just using a wick to go below that level and closing above. The same thing that has happened here. I won't be paying too much emphasis to the support and resistance, but take this level of invalidation as your support. So whatever I talk about this level is valid for support and resistance as well. So these kind of moves do happen a lot in the market. Whereas you get price coming down, then wicks below this particular trend line and closes above it, or wicks below this low, so this threshold low, and closes above it. Other times, what we have is a full close below it. Like we have this threshold here, we have price coming to break it like this, and in the next candle, what we get is this. We get the opening here, and then a close back right inside here. These same moves happen also on the trend line, where you get a full close below it and a full close back with a green candle back inside of it. We normally call these movements in the market stop ons. Stop ons. This is exactly what is happening. It's a stop on, right? But then this is also a low, destruction low, that once price trades below it, it gives us a bearish sentiment. So how do we deal with this when we see this kind of pattern or this kind of pattern giving us a bearish sentiment? How do we know that market is no longer bearish? Because most times when something like this happens, what we end up seeing is we end up seeing price coming all the way from here and creating new highs. Whereas price traded all the way from here to break this trend line with a type of candle like this, people turn bearish and they are shorting on the retest of this trend line, and then price continue to make an higher high, or price trades into this invalidation level, make a type of pattern like this, or the other two candle pattern where one is a red candle closing below it and the other one is a green candle closing right above it, and then proceeding to make an higher high. Definitely we have a lower low, so our buyers should change to being bearish, because coming all the way from this side to this particular lows has given us a lower low to this. Then we should expect something like this to retrace up and give us a lower high and then continue to the downside. But that is not what we get. What we get is price making a higher high to this and continuation of the bullish sentiment or the bullish market structure. So how do we deal with these things is what I want to talk about. Now, this is it. We have probably a demand zone here, but let's not think too much about that demand. But then we have this structural low, we have this trend line. How do we ascertain that this market has fully broken? That is done with candle closes. I will make examples and give scenarios to back it up. Now, if we have a red candle closing like this, as the price is coming down, then we have a red candle closing like this. Or as we have this structure lows, we have a candle as it's coming down, it's also closing bearishly below it like this. That is the first point that is showing us that this market is about to reverse, or that this market, or that this trend line rather, is broken and this structure low is broken. Then the next point we want to see is another candle. Mostly I use two candle confirmations. You want a candle that will then open, assuming this structure low is not close to this trend line. You want a candle that will open outside of the trend line, and it will have entirely nothing to do with the trend line. That means it wouldn't even take a week to touch this trend line anymore. Because if you see markets coming up onto this trend line, it shows that the bulls were once in action on this trend line, on this move, and they are trying to take back control back into or above the trend line. So once you see a move like this, a break with volume like this, and the next candle has a wick touching the trend line, then do not ascertain or do not believe that that move has been completely broken, or that the trend line has been completely broken, because on the next candle you can have another candle or a bullish candle which should then interact with the trend line again, and even probably close above it. This might not be a red candle because red candle cannot open here and close here. And then what we have is a reclaim, what we have is a reclaim of the trend line, where price will then come back from this particular lows into the trend line, retest it and continue. Then we have a new trend path. Now let me explain it with this invalidation level. So once we have a close like this with volume, the next candle we want to see, we likely open here. We want to see a candle, even no matter the body size, we want to see a candle going down, not coming up, to interact with this level like this. Sometimes interaction with this level when it comes to lows like this is good, because it shows you bulls are trying to take back control, but the bears wouldn't allow it. So nonetheless, you want to see a move like this. This is the first one and this is the second one, and if possibly you want to see like two more after this, to be, even if it's a green candle, if the second candle in a row is a green candle, it wouldn't matter in as much as if it's a candle like this, in as much as there is no interaction with this particular level. Most especially it happens like that with the trend line. If there is interaction like this with the invalidation level, but it got pushed back, it doesn't mean anything. The fact that you have the first candle closing strongly below the invalidation level and the second candle closing below the invalidation level shows that the bears are in control. But when talking about the trend line, it's a different matter, because you do not want interaction with the trend line like this. Assuming you have this close here, then you have another candle like this with a wick into the area like this. Now some people will be shorting, saying it's bearish. It is not. We can continue to have interaction with the trend line. It will be resisting, but price will refuse to go down, only for it to then come back up and make an higher high than this. Now this is the reason why I said we want to see a candle close either below the invalidation level here or below the trend line. More than one candle close for the trend line, at least two. This particular one, that is a breaking candle, then another candle closing below it, another candle closing below it, either green or red, but you don't want to see anything like wick touching the line on like one occasion, then the second occasion, then you have your trend line completely broken. Here you can have a wick touching it, in as much as it still closes below, it is fine. Now let me make an example of why we do not want to see wicks breaking the zone. Let me draw that again using the wick. Here we have the invalidation level. We have the invalidation level here. We have price coming down with a wick, just a wick below it, like this. Now if you have a demand on support where it is broken, yes. If you have stop below here, your stop might be triggered. This is why we call it stop loss. Now think of this as, okay, fine. Now remember in the price action video, I said I was using two candle formation. I said where you have a bearish candle like this, or where you have a bearish candle like this, that this particular loss was the last line of defense for the bulls, and for it to be broken down means the bulls were asleep or they lost their guard and the bears penetrated them badly. Now this is it again. We have this structure in place, right? This series of higher highs and higher lows. That means this invalidation level is the last line of defense for the bulls. This is where they have their barricade or their wall. And the top here, which is a resistance from where price is coming down, is where the bears have their own wall as well. So it is a war, it is a battleground. Now, for bulls to allow bears to invade their territory or this place, is a boost territory, because this is their last line of defense, this is their fence, this is their gate. All this area, we have liquidity resting there, right? And we might have a tap into the liquidity, yes, but then this are the area the bulls want to protect, especially this level here. They do not want the bears coming below it. But the fact that they have allowed the bears to intervene and break this low in to tap liquidity here, or to invade their home. This is their war, right? They invaded the war and tapped their resources. Okay, let me use this ground as their resources. They've allowed the bears to invade their walls and tap their resources. That is here. Their resources is the money, right? And then we see this week, because that is a sign of buy pressure. Bulls there were able to fight back. Either they were asleep before, and when they realized that their home has been invaded by the bears, they woke up, called for some backup, and were able to fight back and push the bears outside the wall, and the candle closed like this. But the fact that they have allowed the bears to breach their wall shows weakness on the side of the bulls. And the fact that they have woken up to push the bears outside means they might still have that little momentum in them to continue pushing the bears even further away back into the bears region, because this is where the bears are now, right? This is the playground of the bears. That is where the bears have their own resources, and that is the sell side liquidity. I hope you are getting it. Or is it sell side or buy side? But then there is liquidity pool here, and there is liquidity pool here. This is a region the bulls are guiding, and this is a region the bears are guiding now. So the bulls have been able to push back the bears. If they have done that with so much force, there is a high possibility that the bulls will still have the momentum to carry out the attack and push back the bears back into their region. It may not be in one candle, it may be in series of candles. Let me draw this back like that, and let me do this. It may be in series of candles like this. They'll be able to level up, then push back, and then push back the bears into their level. This is one of the scenarios that is likely to happen after this. That is why we say, when you in price action, when you see an hammer candle like this, it is a possible reversal signal. I hope you are getting this. It is a possible reversal signal. That is the hammer. Now, it may not also happen like this, because the fact that the bulls were asleep and the bears invaded them means there is a loophole. There is a loophole somewhere. So the bulls might have been able to push them back up here, and then the bulls might even be trying to push them back up into their area, into their zone here. But the bulls having in mind that, the bears having in mind that we once invaded this war, we broke down this war, we invaded, we took their resources. And for us to take that loophole is still there. If it is not yet patched, or if it is not yet fixed, the bulls now, the bears will then have to re-strategize. The moment the bulls are pushing them back, they will have to re-strategize on how to better invade the bulls again, and invade again into their territory and steal their resources. So what we might likely have, I've given the first scenario where the bulls were able to overpower them and push them back into their region. Now this is another scenario. The bulls might be trying to push them back, but the bears, knowing the pattern they used, or the tactics they used in first invading their home, why they were how will I say it? Why they were lackluster, or why they were unaware. The loophole they use, they will try to capitalize on that again and use that same pattern that led them into the grounds of the bulls, and then they will use that again, and we might then get another serious attack on the bulls, invading the walls again using the same either it is an underground how do they call this thing? Underground sewage way, sewage part. If that is the place they used before, if there is a wall, an opening in the wall, they just have to find a way to get back to that zone and take advantage again and invade the boost region. So something like this may happen. This is why they say consolidation on top of support is bad, and consolidation under of resistance is bad, because they might just find the power again to overpower the boost or overpower the bears. So this is another scenario. Now, the third scenario, okay, let me use another example to describe this. Now, think of this as a football game. Think of this as a football game. I know people who watch football, right? Now, in football, we have, let me remove this as well. Okay, let me change this. In football, we have, let me do this again. So in football, we have something we call the goal post, right? Let's say this is the last line of defense. Let's say this is the goal post now for the bulls, and this is the goal post for the bears. I hope you are following. This is the goal post for the bears, and that is this zone. You know, in football match, that is where all the players are defending. You have your attackers, you have your midfielders, and you have your defenders and the goalie. They are all defending their goalposts or their goal zone from invaders. Now, the invaders, we have two teams, right? It is a battleground. Match of bull and bears. Let me change this to another color. This is a match between bull and bears. That is a mid-range. We have a mid-range here, right? And everything is like, that is everything in trading is like football or war. So this is the goalpost of the bears, where they were coming from. This is the goalpost of the bulls, where they are defending. So we have the players of the bulls here. We have the players of the bears here. Now, the fact that this team might have been playing for like 60 minutes, and they couldn't score each other. They are drawing each other 0-0. It means it is a strong match, right? But if the bears were able to take the ball all the way from this place, all the way from their goalie, take the ball down into the zone of the bulls, you know, the moment this pathway is crossed, means they are already on the territory of the bulls. That is the mid-range. You can check this with your fibonacci. That is a 50% range. The moment price crosses into the 50% range, means they are in the territory of the bulls. But then they are defending their goalposts. They are defending their keepers. That is why you have 4 defenders defending the keeper and the goalpost. So the bears cannot score a goal. But then if this happens, if the bears were able to take the ball all the way from their goalpost or their goalie, and then they do something like this. They do something like this. What does this mean? Remember, this is the low to break. That is the invalidation level when talking about price action and market structure now. And that is where the goal line is. The moment the ball crosses that line, it is a goal. And for the fact we are seeing this pattern like this candle like this, it shows that a goal was scored, right? And for the fact that these bears were able to score a goal, what does it mean? But then the bulls were able to push back that goal outside of the goalpost, just a bit outside. What did this mean? I don't know if you can just, in one way or the other, think of it. But in my way, I will say, this pattern here shows that a goal was scored. But the fact that we do not have a solid candle like this, which this could have been a confirmed goal. But what we had is this. What we had is this. What does this week represent here? It shows rejection, right? As we know, we call week's rejection. That the price was once there, but it was rejected. Either hard rejection or weak rejection. But this week was rejected. And so in that football match, what does this week represent? It represents rejection. That means either the goal was scored and the players, the boost players protested, and then the referee decided to check the VRA, and upon checking the VRA, he discovered that before the BS were able to score this goal, there was an offside. One of their players was in an offside position, or he used his hand to touch the ball into the net, or there is a foul somewhere disallowing this particular goal. That is why you see this rejection. That means the goal that was scored by the BS was rejected. So that goal now is cancelled. That is not a complete goal. But think of it strategically as a coach. If you are a team, I mean, if you are the coach of the BS team, and then you are able to use a pattern, maybe you just change your strategy. You found a loophole in the defense and the midfield of the Bulls. That is your opponent, right? You found a loophole in their strategy. Then you decided to change a bit your pattern of play or your own strategy and tactics. After changing your tactics a bit, maybe you remove the player, a slow player, and you put in a very fast one, or you put in a very skillful one who is able to dribble his way around the defense of the Bulls. Then, which led to this first goal. Force, not first. Force as in disallowed goal. You know, as a coach who is trying to win on the part of the BS, what will you do? You will want your players again to try that same pattern which led to this goal, but then you will want them to be careful. So if the first one was disallowed due to an handball, or it was disallowed due to an offside, or it was disallowed due to any foul of any nature, you want them now to be careful to not commit that same foul again. But then you want them to follow the same pattern which they did in scoring this goal. And what might we see? We may see them again, trying again the second time after they have rejected this goal and after the Bulls have played it back into the open field of play. That means probably the Bulls now have done something like this, right? They have done something like this, probably from here, and try to play into they are trying to continue play. And then they will want to take the control of the ball back into the territory of the BS. But the BS, if they are able to seize the ball again, if they are able to seize the ball, they will want to repeat what they did there, right? Which means they will try that pattern again and try to invade that loophole. If the loophole was a weak defender, they will be using that side of the defender. And then they will try to play the ball again and try to score a valid goal this time around. So what I'm trying to say in essence is, if you see this pattern where the low is broken, it shows weakness on the part of the bull. But it does not necessarily mean that the price will go down that very moment. For there to be rejection and a close above of this, and a second close above of it, means the bulls might just have the momentum to take the ball back or to take the battle back into the field of play and then push it back into the zone of the BS. Which means if you have a rejection on a low like this, your stop loss will be haunted. 1. 2, after haunting your stop loss, the bulls might then be able to take control from maybe after they got this first goal, the goal that was disallowed. They realize that, oh, they have been compromised, they are getting weak. So they gather around again to solidify their defense. Maybe they change their formation from 4-4-2 to 3-4-3 before, and 3 men at the back could not hold. Then they revert back to 4-4-2. That means they are awake that, oh, if we continue using this pattern, our defense will become very weak and these people will take control. So they revert back to the old one, and then they are able to push the ball back into the side of the field of the BS. That may not also happen if the BS were able to take control of the ball, because they will also try to push price back again and use this loophole that was earlier found and try to score a goal. Now, this is where it is interesting. If the goal that was earlier scored was a valid goal. What do you think will happen? Like a valid goal like this, that means the bears are winning, right? No contest. The bulls will only try to pass the ball again and restart the game. And the bears having a goal already, having the tactics they use in the goal, they wouldn't even give chance to the bears. They will rush them so hard that they will be able to push price even further down. And pushing price further down means scoring another goal. Now, this is another thing. I hope you understand that. This is another thing. I showed this pattern earlier on, that where you have something like this, and then you have another one coming right back like this, closing just above of the invalidation level. Now, what does this pattern mean? This is also another fake out or stop point. This means that a goal was scored, yes, but the bulls, after seeing that a goal was scored by the bears, they woke up themselves, or they came back to life, and then they were able to push hard against the bears and probably score their own goal, which means they're able to push price back above this, back into the field of play, and then take control. That is what this means. So once you see two candle formation like this, where one is a full close below the level of invalidation, and the second one is another close above the level, be careful when you see patterns like this. Do not attempt to short, even though the zone is broken. If you want to attempt to short this, attempt at the extreme end, not from the mid-range. I hope you are getting this, because this shows that the bulls are taking back control with seriousness. The same thing that happened with that week. Now, this is valid for support and resistance, supply and demand, market structure, and trend line. I hope you get the simple analogy I've used. So, all in essence, putting it all together is the same thing as when we have the trend break. Like we have a trend break like this, a strong break like this. You want to see something like this, that the bulls, the bears are fully in control. Even if you have just this one close outside without interacting with this one, it is good. Then you can anticipate that a retest like this will lead further down, because the bears already have a way. But then if you have something like this, another candle here coming like this, if not touching it like, if it's touching it like this, that means the bulls are probably gaining control. But if it happens like this with a wick back into it like this, then the bulls are still telling you they are trying to take back control, even if they haven't won the control. But for it to interact with this line means they are trying to take back control. And we saw this pattern happen on Bitcoin recently. Let me see if I can get a Bitcoin chart here. We saw this happen. I think it's from these lows like this. Okay, I think this is it. Okay, I think this is it. So look at exactly what happened there. We have a break of this trend line here. But this is also a break, but just a little distance away from the trend line, which is telling you the seriousness on the part of the bears, the bulls. It means they are trying to take back control. But assuming we do not have this upper wick at all, and a better close of the candle body than this, what do you think will happen? Price is likely to go further down. But then on the second candle, which has closed outside of the trend line when it has broken, is a very bullish candle back into the trend line. And then what did you see after then? We've seen a continuation of price rallying to the upside, even though it's a weak movement. This movement is weak movement. But the fact that we have a strong close back into the candle, into the trend line, shows seriousness on the part of the bulls. And probably when this trend line was broken, it's probably because they were sleeping. They were caught unaware But on this other candle, which is closed as red as well, they still show their desire to push back price into that field of play. And then, did they succeed or not? This action is what will tell us that they have succeeded already. And then, trading supply and demand, we have a demand here already. So if price comes back into it like this, you expect it to continue to the upside. So this is what creates what we call level-to-level trading. And level-to-level trading is where you have a zone here, you have your demand here, and probably you have your supply here, and then you decide to enter your demand at this level. Enter your long entry at this level and exit here, not caring whatever market structure is doing. You see a zone here, you take it if it's good. You see a zone here, you take it if it's good. You don't care if the market structure is bearish or bullish. We will talk more about that when we get to the supply and demand lessons. So bear in mind the break of structures, the break of trend lines, the break of support or break of levels. That is very important. Okay, see another thing I've just spotted here. See one last example here. See this trend line here, this particular one. This one I was connecting these lows and this low. When it broke here, what did we see? We saw it close with momentum and volume, but then we can also see the desire of the bulls to push back price into the level ground, which, no, let me remove that, which is this, like this. Sorry about that magnet. Something like this. We saw this break, but we see desire. It didn't touch it quite all right, but it got close. It got close. If you look at this candle here, let me erode that. If you look at this candle here, this very candle there, look at the wick. It got close to the trend line. It didn't quite touch it, but it got close. And what happened after all? We saw some consolidation to the right side. We saw a price trying to take back control again, but pushed back by the BS. Those are the people shorting because they have seen a break of the trend line. These are the people shorting here. And then what happened after all? Bulls were able to take back control. So what do we want to see? We want to see a full close like this. And another, probably, if it's not a bearish candle, but distance from the trend line. We don't want something interacting with the trend line. Any interaction with the trend line is showing that the bulls are trying to take back control. We want a full bearish nature. We want it to be bearish, where they give zero chance to the bulls. We do not want them to give a chance to the bulls at all. We want them to break the zone, break it with momentum, break it with either volume or no volume, just break it with serious momentum. And the next candle should still be a serious bearish candle, showing that they are not giving the bulls any chance. Once we see that, then we can fully conclude that yes, the BS mean business, or the BS players are serious. That is how we confirm break of structure or level breaks with close of candle confirmation. If I'm able to see any other one here, I could have pointed your attention to it. As you know, I do not prepare for these lessons before I do them. So that is it. I hope you understand. If you do not understand any point or anything I have said this evening, do not hesitate to ask. I will clearly explain using my football players or the war tactics. That is it. That is exactly what we do every day here. So this week, unfailingly, we will be commencing the supply and demand series. But this is an important level, important course for you to know, because if we see a demand here, and as you can see, the demand was tested here, perfect test if you use a week. So, but then you might as well have some break, like something like, okay, this is another demand, but I wouldn't trade that head. This is another one here, another one there. A lot of demands for me, little supply. So if in case you have, maybe let me do this quickly. In case you have these demand zone like this, and then you have a candle coming to break it like this, with a wick. You know what that means. Or if you see something breaking like this, and then the next candle is like this, you also know what that means. You know, these are fake outs, they are stop ons. It means this level has broken, yes, because bulls gave them chance, but it does not necessarily mean that the price will continue to go down. Price can just rally up from there. So once you see either the hammer or the pin bar on zones like this, you want to be careful about shorting, because some breakout traders, they will place their breakout trades just below this level like this, their stop sell. That the moment it breaks, then they want to sell. But this is what will then happen. A red candle will come like this, then it will fill their order only to close above, and then the next candle you see will just be a very big, massive green candle like that, which means they are haunted, they are trapped. There is stop ons here, and then there is bear trap. Two things have happened. So once we see something like this, this is why I trade. Or if I want to trade, I place my stop loss with confirmation. I want to see something happen like this, and then if it closes back inside, I wouldn't cut the loss. So I do not place add stop loss. But then if I see it coming like this or playing like this and closing below the zone like this, then even if it's just one, at times I wait for the second one, but the second one might be too late, as you can see something like this. But the moment I see something like this with close below it, I just stop the loss manually. No long story. I'm wrong. So it happens like that. Or sometimes if I want to place another stop loss, you have to be wary that, okay, this zone is quite big, then where should be your distance to stop? You want to calculate that. All that will come in the supply and demand lessons. So thank you very guys for listening, and do not forget, always like if you like the content, and if you understand it, if you think I'm making sense, click the like button. It doesn't take you 1 minute, it doesn't take you 1 second, it doesn't take you any money, it doesn't take you nothing, literally nothing. I am the one taking my time to do this. It doesn't take you anything, just your time to watch. So, and if you think I'm wrong somewhere, dislike it so I go back and watch the video and see where probably I've gone wrong. You can also comment if you do not understand one or two things, so I can clarify myself better. And also, do not forget to subscribe to the channel so I can see that, okay, we are reaching people. At least let's touch people, let's change people's life little by little, let them get into trading, and then we will be proud that, okay, they learned one or two from us. So that is it, guys. So thank you, and happy Easter holiday that is coming very soon. See you next time.